property. Or, yeah, I mean, that's probably the best example. Then there's your forecast earnings to price, which is what using the sentiment data from brokers, and then of course there's the historic dividend yield, which is the amount of earnings that are, just looking at time, the amount of earnings that are actually dispersed to investors in form of dividends. And of course there's historic book to price. The momentum signals that I was talking to you about before, there's the 12-month momentum one, the one I've got highlighted in red. So that's the one that you tend to get a certain amount of autocorrelation or self-correlation. So once, it's kind of like the bubble, you can think of it as a bubble factor, I suppose. Whereas 1 month change in price, that's more about, that's about reversion. The sentiment ones, I mentioned before about the change in consensus, change in forecast consensus by sell-side analysts. And then lastly, there's the quality factors, return on equity, both historic and forecast, and the components, operating margins, cash flow stability, as well as financial leverage. I'm sort of conscious of time, actually. I've probably got another 10 pages to go through. Is it worth, should we keep going? Yeah, okay. All right, so how do we actually go ahead and calculate what the historic earnings to price is? Actually, you might jump on Yahoo. How do I do this? Good spell. We might do a few of these and then I'll reconvene at the last lecture. Finance, and a symbol, PHP. Alrighty, this available this data is all available freely. So key statistics, let's have a look. So we've talked quite a bit about some of these variables. There's your market cap. It's one of the largest stocks in the world, BHP. And let's see, what do I need? I need okay. So there are a number of ways of calculating earnings to price. The first, probably the easiest way to do it is actually take the earnings of the company, which is here, 9.9 billion, and dividing by the market cap of the company. So that's 9 divided by 158. Now these stats that I've got in here are a little old, and actually give you a slightly different way of calculating the earnings yield. And in fact, it would imply here, let's see, net income of 10 billion on 16. That's, let's see, what's that? 16th, that's about 6. So that's about 6 times multiple. So the actual earnings yield looks like it's actually dropped. So it was about 7.5, and now it's actually dropped to about 6. So it's not looking as cheap as it was, say, 6 months ago, which is interesting considering its underlying economics at the moment. But there are actually a number of different ways. In fact, the way I just actually calculated was by the net profit divided by the market cap. But what actually, I just realised one of the problems that I have not included in here is that because BHP is a dual-listed company, I need to be aware of the market capitalisation in London as well. But basically, it's you can either calculate it by taking your net profit divided by your market cap, or on a per share level, you can take its EPS divided by last traded price. EPS is equal to net profit divided by number of shares, and last traded price is market cap divided by number of shares. So it's effectively the same calculation. But that is pretty much in a nutshell of of how we calculate earnings yield. And we prefer to calculate earnings yield because what do you do about companies that are actually are loss makers, that have got a negative earnings number? If you go price divided by a negative number, then that's kind of weird, and it's discontinuous. You actually end up with a series that is actually not nice and continuous. Whereas if you invert the ratio, this is one of the tricks that quants do. If you invert the ratio and calculate the earnings yield, then effectively you get a nice continuous series where a high earnings yield is regarded as cheap, good, whereas a very low or negative earnings yield is regarded as bad. The negative earnings yields are, of course, the loss makers. Alrighty. The next one is momentum. Now, coming back, and I did mention this before, but if we looked at a historic price chart, can we get a chart, basic chart? There we go. So this is really simple. All one has to do in order to calculate your 12-month momentum, your bubble factor, is grab the price now, divided by the price 12 months ago, say, minus 1, and that gives you your change. And stocks that, basically what researchers found is that stocks that have got very strong 12-month momentum tend to keep outperforming, and those that have got very strong negative momentum keep underperforming. So effectively, I don't know if have you guys heard of technical analysis before? Some of you have. So the momentum is arguably in the realm of technical analysis. Obviously, technical analysis will do things like moving averages, MACD, all that type of stuff. But momentum is kind of in that realm. But I mean, my attitude is probably keep it simple, stupid, and 12-month momentum is probably good enough. I mean, it depends on the market. If you're looking at, I mean, like if you look at the sort of state of play in global markets in relation to, say, divergences of monetary policy globally, you often find that, depending on the regime, certain strategies like FX-related strategies do perform well in certain environments. So in the last couple of years, FX momentum strategies have actually performed extremely well. FX being kind of like another asset class, although it's not really, but it is, but not. The third, so that was momentum. Coming on to estimates is the, how do we get the, oh, it doesn't really matter. I was just going to say, how do I get it to slideshow?
Yeah.
Is that it? Oh,
no, from Karen's slide.
From Karen's slide.
Yeah.
Perfect, thanks. The sentiment factors basically revolve around tracking how the analysts are forecasting their changes in, tracking the changes in the analyst forecasts. So basically, if that information is available, then using it. Particularly the large stocks are very well covered. In fact, sorry, I'll just go back here. Quite often, there you go, analyst estimates. This is Yahoo Finance again. You can see current year. So you can see all the earnings estimates here. Current year. Well, actually, it's not. This one is actually not particularly helpful. But the idea is that if you can look at some of the EPS trends, that effectively the EPS trends there. That'll effectively get you a window on how earnings forecasts are being revised. And in fact, this factor here, thing here, EPS revisions, actually captures in a very similar way that these sentiment factors. So this can potentially be quite useful. If you're getting lots of upgrades, then that's potentially a signal that you might to start owning the stock. And lastly, there's your return on equity. Now, return on equity, that's really, again, really simple. All you need to use is your net profit divided by your common equity. Now, we already saw the net profit in BHP when I looked at the income statement. Net income and then divide that by the common shareholders' equity, and wherever that is, which doesn't seem to it's not been added up, so it's absent. But you add those, or actually, you add up all of those, that you'll get your common equity, and that will give you your return on equity. How are we going?